Hello, friends. I welcome you all to this short snippet by BCAS on the recent notifications and circulars issued by the government pursuant to the 54th GST Council meeting. There is a flood of circulars and notifications that have been coming right from the Finance Act 2024 number 2, then the 53rd Council meeting, and you have a number of circulars and notifications and the proposals that have come out of the 54th Council meeting, which bear a relation to the 53rd Council meeting as well. With that short introduction, let me quickly share my screen. So we'll discuss here in a few of the important recommendations by the 54th Council meeting. Okay. The first one is GST implications on renting of immovable property. Okay. Now, as we know that immovable property may be a residential property or a commercial property, where a person who's owning a residential immovable property is a registered person. That's the first case that you're seeing on your screen. And where he rents this to an unregistered person, and where such letting out is for residential use, then it is exempted under entry 12 of the exemption notification number 12. However, where such registered person lets out this residential property to an unregistered person for non-residential use, it becomes taxable under forward charge. The second situation is where the residential property is owned by an unregistered person, and he lets this out to a registered person. In that case, with effect from 18 July 2022, entry 5AA has been inserted in reverse charge notification number 13. And here, the registered person who is taking such residential property on a lease shall be liable to pay tax under reverse charge. Again, where such residential property is owned by a registered person, given on rent to another registered person, even in this case, it shall be covered by the RCM entry, and the receiving registered person, that is the lessee who is registered, shall be liable to pay tax under reverse charge. Coming to immovable property, which are commercial properties, and where the owner is registered, the lessee, that's the occupant, is unregistered, it's a commercial property, and he will have to pay tax or collect tax under forward charge. Again, where both the lessor and lessee of the commercial property are registered, that's the third situation which you see on the extreme right of the screen, it will be taxable under forward charge. What has changed with the recommendation of the 54th Council meeting with effect from 10th of October 2024 is that these cases where an unregistered person lets out his property to a registered person, such registered person who occupies this commercial property owned by an unregistered person shall be liable to pay tax under reverse charge mechanism under entry 5AB, which has been introduced in the RCM notification 13 by 2017. We move to the next recommendation, the most sought after and anticipated and a welcome step, that is the amnesty scheme, as we all popularly know. This scheme was proposed in 53rd Council meeting. After the recommendation of the 53rd Council meeting, Finance Act 2024 number 2 introduced this by way of section 128A in the CGST Act. This waiver scheme is applicable, please note, only for the years 2017-18, that is July 2017 to March 2018, financial year 18-19, and financial year 19-20. The section comes into force from 1st of November 2024. The benefit of waiver of interest and penalty is available only in non-fraud cases. What do we mean by non-fraud cases? Where the original adjudication has started or where the notice has been issued under section 73. We all know that there are two provisions. There are two provisions under the CGST Act. One is 73 and 74. 73 covers non-fraud cases and 74 covers fraud cases. The benefit of waiver under this section 128A is available only where the adjudication of the starting point is section 73. However, where any notice has been issued under section 73 for passing on of erroneous refunds, that will not be covered by 128A. A detailed FAQ or a detailed clarification has been issued by Circular 238 dating 15 October 2024, where various doubts have already been cleared by the government. The procedure of applying, the procedure and conditions of application under the amnesty has been provided or prescribed under Rule 164, which this rule also comes into effect from 1st of November 24. So the primary condition under this scheme is whatever is there in your show cause notice or whatever is there as payable or whatever is demanded under an adjudication order, the taxpayer is expected to make the entire payment of tax quantum on or before 31st of March 2025, which is notified. After making the payment on or before that notified date, he will then make an application for waiver of the interest and penalty part in the notice or as the case may be in the order. Which cases are eligible to apply for this scheme? So by and large, I've already told you, it's cases which are adjudicated or are proposed to be adjudicated under section 73, that is non-fraud cases, are eligible to apply for the waiver of interest and penalty demanded. On your screen, you see 4 scenarios. So we'll first deal with the first 3 scenarios, which are covered by section 128A subsection 1, clause A, clause B, and clause C. First, clause A, where a notice under 73 has been issued, but no order has been passed. Okay. The notice has been issued, but no order has been passed, is covered by clause A. Clause B, where an order under 73 has been passed, but no appeal order or no first appeal order has been passed. Okay, so there may be a situation where an order is passed, but the taxpayer has not filed an appeal against that order. Or there may be a situation where an appeal has been filed, but the first appellate authority has not passed any order. This is covered by clause number B. Clause number C covers the situation where the first appellate authority has passed an order, but the tribunal has not passed an order. So we can have 2 situations here. The first appellate authority has passed an order, but no appeal has been filed before the tribunal. Or where an appeal has been filed before the tribunal has not given any verdict on that. For all practical purposes, we will see most of the applications coming under 128 subsection 1 clause B, because we either will see situations where 73 order has been passed and no appeal has been filed, or having passed an order, the taxpayer has already filed an appeal. Having discussed these 3 cases, the last case is covered by proviso to section 128A subsection 1, which talks about situations where an order has been passed under 74. When I say 74, the original show cause notice and or the demand order has been passed as a fraud case. However, on making application to the appellate authority, the appellate authority has ruled that this is fit to be adjudicated or assessed as a non-fraud case. In such situation, the proviso covers this situation where the original authority who has originally passed an order under 74 shall redetermine the demand under that against that notice under 73 and pass another order. Those orders also are qualified or eligible cases for waiver of interest and penalty. Now let's take each of these separately to understand what is the procedure that has been either given under the provisions, statutory provisions of 128A or by way of the delegated legislation under Rule 164. We're talking about the first case that is covered by clause A of subsection 1, where a notice has been issued but order has not been passed, which is not so likely. In this case, the payment of entire tax has to be made on or before 31st March of 2025 in DRC03. Subsequent to that, the taxpayer will file an application for the amnesty or the waiver under 128A with form SPL01. Simple. The next situation is covering where orders have been passed, which is either covered by clause B or clause C. Okay. In that case, the first and foremost thing what the taxpayer has to do is to withdraw the appeal that he has filed. Okay. So before filing for a waiver application, he has to withdraw the appeal. Having withdrawn the appeal, now he has to pay the tax. And he has to pay the tax only against the debit entry in the electronic liability ledger. So if he has paid a DRC03 either full or part, what he has to do is he has to follow the procedure given under Rule 142. He has to make an application in form DRC03A and ensure that the liability that has been debited in his electronic liability ledger is knocked off by way of a payment entry. After having followed these steps, that is, having withdrawn the appeal, getting payment against the debit entry in electronic liability ledger, then he will file an application for waiver of interest and penalty in SPL02. Now we come to the last situation where there is a redetermination of a fraud case to a non-fraud case. Such situations are covered by proviso to section 128A(1). And what does it say? The taxpayer has to make payment of the entire tax. Here, 31st March 25 is not a deadline. The deadline is within 6 months after the redetermination order under 73 has been passed. Okay, so there is an appellate order which says that no, you have adjudicated this notice under 74, but it's not a fraud case. So you re-adjudicate this case, pass another order under 73. 6 months from that date, the taxpayer has to make the payment according to the entire tax demand under 73. And after that, he makes an application for waiver under form SPL02. Two important dates which we have been speaking, okay, where cases are covered in clauses A, B, and C. The due date for making payment of the entire tax as per the notice or the order should be paid on or before 31st of March 2025, after which application for waiver shall be made. And where there is a redetermination of fraud case as a non-fraud case, the payment has to be done within 6 months from the date of the requantification order. Clear? So, waiver benefit applicable even in case where tax amount has already been paid. These are few clarifications which have come by way of a circular, which we've referred in the first slide. Waiver benefit applicable even in cases where tax amount has already been paid. So let's take a situation where in the course of adjudication, you were aware that this scheme is coming. So you paid the entire amount and the order has quantified only interest and penalty. Okay. In such cases also, what the circular says, as far as the tax is paid on or before 31st March 2025, there is no problem. You're eligible to make an application. Only condition, it should be a non-fraud case. At times, taxpayers have received multiple notices for the same financial year. In such cases, separate applications for each such notice or order has to be made. Now, a small catch or a small difference in this scheme is that if the department has filed an appeal against a particular order for which you are making an application under amnesty, and if on appeal, if there is an enhancement in the demand and there is a favorable judgment in favor of the department, then to the extent of that enhancement, the tax quantum has to be paid in future by the taxpayer. Yes, the payment of tax under the amnesty scheme can definitely be made by way of debit to the ITC ledger. And tax amount should be computed. So when I say that the entire tax demand has to be paid on or before 31st of March 2025, that would be after excluding the benefit which has been given to the 16.4 cases. Okay, the entire ITC reversal does not have to be made in terms of 16.5 or 6. So total demand as per the order minus whatever relates to 16.4 cases, you minus that because that entirely is given relief under 16.5 or 6 as the case may be. The balance amount is what is to be paid before 31st March 2025. With that, we move to the next recommendation. Again, a very big welcome move and was much anticipated since past couple of years. Relief in cases covered by 16.4. So first, let's quickly go through what section 16.4 states. 16.4 states that any invoice or debit note, every registered person has the right to claim input tax credit, but he cannot claim this input tax credit at any juncture. Okay, he has to claim it within a particular time frame. Okay, where 16.1 clearly says that I will give you this credit. It is your statutory right, and you can claim it, but it is subject to certain conditions. You have to claim it in certain manner and certain time frame. So we all know that the time frame earlier was 30th of September of the following financial year, which now has been extended to 30th of November. Now, in the early parts of implementation of GST, there are many cases where these credits have been claimed belatedly. Some people had this system that unless it does not appear in my GSTR 2A, I will not claim credit. And in such cases, there have been belated claims of credit based on its appearance in 2A. So the 53rd Council Meeting gave this relief by proposing the insertion of section 16.5 and 16.6 in the CGST Act, while 16.5 gives a general relief for 4 years, that is 17, 18, 18, 19, 19, 20, and 2021. It is giving an outer limit of 30th November 2021 that any document, that is invoice or debit note, which is dated anywhere between 1st July 17 till 31st March 21, and if the taxpayer has claimed credit pertaining to these documents by 30th of November 2021, everything is relief. So I don't have to look at those documents or invoices for each year, but as a block period from July 17 till March 21, if I've claimed anything till 30th of November 2021, 16.5 is giving the relief. But you know that by this time, orders must have been passed, and at times there must be these orders must be at the first or second appellate stage. These cases are dealt with the special procedure that has been given by the government. Another case is covered by section 16 subsection 6, where relief has been given in cases where registrations have been cancelled. So we all know that once registration is cancelled, you're not able to file returns. And if you're not able to file your GSTR 3B, you're not able to claim credit. So this is a relaxation given that, okay, wherever your registration is cancelled, from the date of cancellation till the date of its revocation, if you missed or if your credit is by 16.4, you will be given an additional 30 days within which you can claim the credit which you missed because your registration was cancelled. So what are the special procedure is given by way of a circular. Okay, there is a notification 22 by 2024, and there is an explanation of that notification or provisions of 16.6 and 5 have been explained by way of circular 237. Okay, let us understand the three scenarios which may arise. Okay, an order has been passed, or sorry, an order has not been passed. Okay, then you allow the credit. Now, the distinction between the waiver scheme that we saw and this relief is that waiver scheme is for 3 years, this scheme is for 4 years. Okay. The waiver scheme covers only non-fraud cases. This covers any case. Okay. So wherever you have missed the bus, and even if your order has been passed or not passed, so section 74, if show cause is issued, order is not passed, then while passing the order, the benefit of this time limit should be given to the taxpayer. Where order has been passed and the allegation in the order is only section 16.4 allegation. So we are not talking about credit not there in 2A, 2B, all that. Only argument in the show cause or the order is that the credit has not been claimed within the time limit set under section 16.4. Then there's a special procedure given where you have to apply for rectification within 6 months. where an appeal has been filed. Okay. So now we are moving to the third set of cases where against disallowance of ITC solely on the ground that there is contravention of section 16(4) and the taxpayer has filed an appeal before the appellate authority, the appellate authority shall allow the credit as per this amendment and accordingly pass an order. Okay. Next, we all know about this facility of GSTR 2A. Okay, GSTR 1A, I'm sorry. This has been introduced by an amendment in Rule 59(1), where if there is any error or if there is any entry in during any particular tax period between the filing of GSTR 1 of that tax period till the filing of GSTR 3B of that period, then the facility of making good that error. Okay, either if there is a mistake or some invoice has been missed to be reported in GSTR 1, the facility, the optional facility of 1A was proposed by 53rd Council Meeting and it's already there in the rule. There are a few other interesting clarifications. A very important clarification which has its roots or was there as a litigation during pre-GST regime also. So the first circular we take is circular number 230, where there is a client who is located outside India. There is an ad agency located in India. Okay. And the contract that the client or the overseas advertiser is giving to the ad agency in India is to do everything in relation to a particular ad. The target audience may be Indian target audience. So the argument or the issue here was that what happens typically is that this ad agency in India is into a turnkey contract where it is planning how to designing or creating the ad or planning which mediums the advertising should take place and who should be the broadcasting agency, what kind of medium I should choose, printing of advertisement in case it's a flex banner or a paper ad or something, or which newspaper should be the ad appear in based on the target audience. You know? So based on this, there is a lump sum contract which the overseas client is giving to the ad agency. Here, the flow will be that the ad agency does a lot of conceptualizing. It may have vendors to help in building prototypes or doing some sort of designing. It may do it in-house. Then there would be various media owners whom they will get in touch with to actually publish the ad. So these media owners typically will raise a tax invoice on the agency. Obviously, they will charge tax, either CGST, SGST, or as the case may be IGST. Then in turn, for all the work that the agency in India is doing for its overseas client, it will invoice the overseas client. The question is, number one, whether the ad agency is just an intermediary. Who is the recipient of service? Because to decide the place of supply, I have to know who's the recipient of service. Is it at times the client may have an Indian representative who would get in touch with the agency. So is that person a recipient, and hence whether the place of supply falls inside India? Whether the Indian audience who is looking at that ad is the recipient. Okay. And is the place of supply of service by the ad agency outside India? If it is outside India, it gets the benefit of 0 rating. If it is within India, that's if the target audience or the representative in India is considered as the receiver of service, or if the agency itself is considered to be an intermediary, then you have section 13.3, 13.8 or 13.3, which say that, you know, the place of supply will be in India. And if the place of supply itself is in India, then the benefit of 0 rating is not given. A very welcome circular, a very detailed circular, where it is clearly clarified that what the agency is doing is on his own account. It's providing multiple services, providing a bouquet of services to the overseas client. Hence, by no stretch of imagination, this agency is an intermediary. It also has not specific to this particular issue, but it has given a very beautiful interpretation of the term recipient. It says recipient is a person who's paying the consideration, who's contracted for that service. Very interesting and maybe used at in other areas as well. So the recipient of the service, irrespective of who is benefiting or who's watching that ad or who is getting involved in making of that ad, whether that person is in India or no, the contractual agreement is between the ad agency in India and the client abroad. It is that client abroad who has signed a contract with the Indian agency, is paying consideration to the agency, and hence the place of supply of such services shall be outside India. We again have a number of very common issues which were also raised during pre-GST regime, which also have been clarified, where a GTA typically also loads the goods into the truck and then offloads the goods, may at times stop somewhere and have an transit warehousing of these goods. They've said that if in the course of providing a continuous transportation service, even if these small ancillary services are provided, it still will be considered as a composite service of transportation. And even if the invoice says that, loading, unloading, packing, if as far as it is in the course of one transportation, they will be considered as GTA services. Very welcome circular. There are few services, few circulars in the pre-GST regime which have been on the same lines. Preferential location charges which a builder collects if you're buying a flat which is located across sea facing or something like that, then those charges also will be a composite supply, and the construction service is what is the principal supply. And these separate charges, preferential location charges, cannot be taxed at a higher rate. Another welcome move, very important clarification, film distribution. As is where is basis, they are saying 54th council meeting on as is where is basis are saying that, okay, where there are two rates, where right to use copyrights was taxed at 12% and film distribution at 18%. Till 30th September 2021, whatever has been done on as is where is basis, this circular is allowing. Refund of IGST in contravention of 9610. So what 9610 says, that you cannot make an on-payment export of goods if you have not paid IGST while importing raw material. Okay, these people are barred. So what happened? A number of cases where unknowingly people have taken benefit of certain custom notifications and exempted their import from duty as well as the IGST. Subsequently, an explanation was added in Rule 9610 stating that if you've taken the benefit of not paying custom duty, it is okay. But if you've paid the IGST on import, then you're not hit by 9610. Now, whatever was done, the problem was that how do I make good of whatever I've already done? Meaning I've imported taking benefit of custom duty as well as IGST, meaning I've exempted both. And I have done an on-payment export, and now the department says that I will recover that refund from you because that was in contravention of 9610. Very welcome circular. This circular says again, if you have reassessed that bill of entry and the benefit of IGST what you had taken originally, if you pay that back along with interest, you're within the explanation to 9610 and you've not violated 9610 and there is no recovery line from you. Very welcome circular. Another clarification with respect to place of supply in case of data hosting services, where the hosting is done by a company in India and the cloud computing or the access or the softwares are being provided by a company outside India. So typically this cloud computing services would take the help of these hosting companies in India. These hosting companies would have a large immobile property space, which either it is owning or it is taken on rent, where they have servers and various IT equipments to house this data. So what has been clarified? One, this Indian service provider who is giving the services of data hosting is not an intermediary. Services provided by the data hosting service provider to the overseas cloud computing service provider cannot be considered to be in relation to goods made available. Again, the third very important clarification is data hosting services cannot be considered as services provided in relation to immovable property. Just because that IT hardware or software is housed in an immovable property doesn't mean that the services are in relation to an immovable property. The place of supplies in such cases shall always be under the general rule, that is section 13(2). And since the receiver of this hosting services, that is the overseas cloud computing company, is outside India, subject to fulfillment of other conditions, this shall be amounting to export of services. Very welcome clarification. One more clarification with respect to block credit in respect of demo vehicles. So we all know that whichever brand of brand vehicle you buy, these authorized car dealers typically are obliged under the dealership agreement to have certain demo vehicles stored, so that any prospective buyer who walks in has the right to test drive the demo vehicle before purchasing a vehicle. Now, we all know that section 17(5) has one particular provision which blocks credit in respect of any motor vehicle. However, this same section provision in 17(5) creates certain exceptions, one of which is that this blocking of credit does not apply cases where this motor vehicle is used for further supply of such vehicle. The question was, and I think it's addressed by few AARs, that when this vehicle is bought by the car dealer for doing a demo to prospective buyers, this vehicle credit will not be blocked. That is what the clarification is. The justification is very interesting. The justification it gives is that the term used, or the exception that 17(5) carves out, except when they are used for making following taxable supplies, namely further supply of such vehicles. Now take a situation where there is a Toyota brand car and there are 4 cars that the car dealer buys. 1 car is for demo, 3 cars are for sale. The circular says that since this purchase of 1 demo vehicle is used for making outward supply of such vehicles, meaning the other 3 cars, that is why the credit is not blocked. Very interesting clarification, or very interesting way this interpretation of the provision has been made in this clarification. Further, it goes to state that where this vehicle, so at times this vehicle would be parked in closing stock of the car dealer, or it may be capitalized as a motor vehicle. Since it usually is kept for a fairly long time of 2 or 3 years, so it may not be debited to the stock, but would have been accounted for as a fixed asset. That really doesn't matter as far as claiming of the credit is concerned. Another important recommendation by the 54th Council Meeting: reverse charge on purchase of metal scrap, where the metal scrap has been purchased from unregistered supplier. Okay, this is effective from 10th of October 2024, and where the sale and purchase of this metal scrap covered by chapter 72 to 81 is between 2 registered person. The person who is buying it would deduct a 2% tax, that is in case of intrastate 1% of C and S GST or UT GST, and in case of interstate supplies the TDS would be 2%. With that, hope this video was helpful to you all. At BCAS, it's our objective, and always we intend to disseminate the maximum and at the shortest possible interval to all people take benefit of this dissemination. Thank you very much. Thank you once again.